Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the tech sector, we're seeing more weakness than we've seen on the tech sector in quite some time. The bulls are okay with this because it's been pretty contained consolidation. It's lasted over quite a bit of time, and we have not seen this prolonged amount of consolidation. But again, we can see this pullback right here back at the end of January, and those 3 days were pretty much as we've pulled back here, if not more, in the past 7 days of this pullback. So the bears are starting to take control in the short term, just as we have lost the middle Bollinger Band support and we are rejecting from the exponential supports. The key level to be watching are the lows of the recent consolidation. I'm looking down at 52.70 and 52.33. If we break those levels, we then have a lower low starting to shift the trend on the daily time frame. The weekly bearish reversal candlestick was negated 3 weeks ago, but now we are on our way to potentially confirming this bearish reversal candlestick. We have not closed below the 4-period exponential moving average since December, and the 8-period exponential moving average has held since then as well. If we see a close this week below the 8-period exponential, which will be at about 52.58 or so by the time we reach it, that would certainly give us some short-term weakness and the kind of consolidation that would be normal and healthy. Again, we've seen such a big bull move to the upside. We're on the verge of a bearish MACD cross. We're starting to see the chinks in the armor of the bulls here on the tech sector, and it's nothing to panic about for the bulls, but we're making note. And if we were to roll over, and when I say roll over, I mean see a more significant dump day. We've only seen really one big dump day here on the tech sector, but if the bulls were to lose it here and see a magnified move to the downside, that would affect the S&P 500 significantly. It would affect these individual bulls at Facebook and Apple, which have not consolidated much at all, and that would shift the short-term momentum that the bulls do have in a lot of these individual names and markets. So Apple here is seeing this weakness. We've seen weak closes 3 days in a row, and really 4 days in a row. And same thing, it's not magnified big moves to the downside. They're pretty contained days, but it's clear that the bears are in control of the short term. We have our key support to maintain higher lows on the daily, 143.01 and 143.05, and we broke those levels with 142.90, the low of the day. The bulls did buy the dip right at the end to maintain 143 as support by closing above it, but we do look due to test the middle Bollinger Band support, which will be in the 142.30s, potentially even tomorrow. We have not seen this bearish TCG cross yet in the last 3 months, and we're closing in on that. And if we lose that daily middle Bollinger Band, we will see that bearish MACD or the bearish TCG cross follow through. So the weekly time frame has not confirmed a bearish reversal candlestick since November. That is now 5 months, and we are seeing a bearish reversal candlestick last week, and we're on our way to potentially confirming it this week. But again, the 4-period exponential has held for a very long time, and that's at 139 or 142.42. Excuse me, I was looking at the 8-period. So the 4-period exponential moving average support is going to be key. If we see a loss of that level and a confirmation of this bearish reversal candlestick, just like we're seeing that starting weakness in the tech sector, we'll be looking for Apple to see some downside weakness as well. Long-term bulls have absolutely nothing to worry about. We are absolutely due for this consolidation, and it would be healthy, but it would be a change from what we've been seeing over the past 5 months. Facebook is similar. Middle Bollinger Band support has held the past 4 tests in the past 3 months, and we are on the verge of losing it. We have not seen a bearish TCG cross in that time period, and we're on the verge of a bearish one here. We're very, very tight. We had an inside bar today with the range fitting completely within the range of Friday, declining volume 3 days in a row. Break is imminent tomorrow. We're either going to get back over these exponential moving averages and keep the bulls in control with a new higher low formed, or we are going to lose that middle Bollinger Band support, and we're going to be looking down at 138.77. So current support is 140.24. And if we see a break, we're going to look at 140.01 and 138.77. So the same thing, bearish reversal candlestick last week, 4-period exponential moving average support still holding, lose that level, and we will confirm the bearish reversal candlestick. You can see so many of these tech names, as well as the sector overall, are seeing very similar trading activity. And if one of them goes, they will likely all go in the same direction. So there are a lot of bears getting interested now in playing puts in these names, obviously with stop losses because we are fighting the overall trend. But like I said, starting to see some cracks in the armor. And we'll see if these bearish reversal candlesticks on the weekly can get confirmed with 3 more trading days left to go. I appreciate you watching. We'll check back in tomorrow. Have a great night.